Hi there, Cyril Trader here. Let's have a look at the major US indices, and starting off with SPX here, looking at the Elliott wave interpretation. Looks like our B wave is now in place, and we're likely working our C wave down for what could be this larger wave too. And I'll get into my positioning. I did take a short position on the ES futures today, so I'll get into that afterwards here, but definitely looking good. And if you just look at the island gap that we had, so to fill that island gap, we would have actually had to come up to this level on SPX, which would have been 3163.84, and we only went as high as 3155.53. So the island gap remains intact, so that's good. That's a nice bearish reversal island that it attempted to fill the gap and was unable to, so that's good for trying to get a leg down here. And you also basically have a double top. So we had this bar on the 16th, which went to 31.53, and we went as high again, just basically 2 points higher, 31.55.53 versus 31.53.45. So roughly 2 points. I'd call that basically a double top and a nice strong rejection today. So I'm pretty confident that we got the B wave in place as of today's high, and we're working the C wave down now. So given that, we can start doing some wave relationships. So A versus C off of B, the equality relationship's at 28.88. So that gets us below the 2900 level. And that's pretty close to filling this gap down here, which is a nice target because gaps like to get filled eventually on the indices especially. And that gap to fill will be 2865.01, so right around that area. And then, of course, that's also close to the 38.2% retracement of this overall move up off the March lows. That's at 28.35. So a move into the 2800s looks pretty good here, is the bottom line. And, of course, if our C wave is a little more violent, goes beyond those levels, we do have the 50% retracement level down here at 27.12. And then, of course, the previous fourth wave level, which, let's see, that terminated at 27.66. So, again, looks good for a move into the 2800s, possibly 2700s here, but we'll assess as the C wave develops further. But for now, let me go to the hourly chart. And the hourly chart here in SPX for a little more detail. So I've been working this 5 waves down for A. That was good. We were definitely expecting a B wave retracement. That looks complete now, and you can see we essentially retraced to in between the 61.8% and the 78.6% retracement. So that's a nice deep retrace, not that unusual. Would have been a little concerning if we went beyond the 786 and filled the gap, but we didn't. So that's nice to see that that held. And in the last video, I was discussing that even though this looked like it could have been the entirety of the B wave here, that the futures chart suggested we'd have to go take out this high. Now, I didn't necessarily expect it to be such a marginal violation of the high, but that actually just makes it even more promising for another leg down. The fact that you basically had a strong rejection at a double top, it would have been less ideal to go, even deeper up here and then start coming down. That gets you doubting it. But the fact that it rejected so nicely at essentially the same level, that's a good sign. Now, the action that led up to that little pop up to a marginal new high, that's also important. So I can count a nice A, B, C, D, E contracting triangle. It respects all the rules of a contracting triangle, no violation. So that's a nice clean triangle B of the B, and then we get the quick thrust up in C of the B. And now it looks like we're good for the actual larger degree C wave down. And of course, we're expecting some sort of impulsive sequence down to do that. Now, as far as my ES trade goes, I think I got an entry just over 3100 on ES, so in the low 3100s. And my stop is going to be, as long as SPX on the actual regular session doesn't take out that 31.55.53, I'll stay with those ES shorts, obviously targeting those lower levels into the 2800s, possibly lower, but again, reassess as things develop. So pretty good trade setup, really. I mean, the risk compared to the projected target, if it makes target, if this pattern actually achieves the desired results. The risk reward ratio is quite good. So let's see how that works out. If I get stopped out and something else is going on and somehow this is still going to go up, I mean, that's just the cost of doing business. But lots of technical reasons here lining up why we have a nice shortable level as of today's high there. Okay, so that's the hourly chart. All I want to really go through there on SPX. Daily chart, I think we're good there. Now that we do have an A and a B that looks complete, we can get our corrective price channel. So you can see the bottom of that channel also lines up pretty well with some of these targets. Typically a corrective channel offers its own kind of time and price target. So when it lines up well with these other targets, that's just a nice confluence. One thing actually. So on this hourly chart here, so yeah, we did a nice price retracement, but we also did a nice time relationship. Now this doesn't always happen. When it does, I like it because it's just I just find it interesting. So we're taking the entire length of time that this A wave consumed. So this is the beginning of A, the end of A, and we'll just project it out. And let me just remove a bunch of these relationships. We'll just put the equality relationship up there. Okay, so here's interesting, or sorry, here's what I found interesting. So the length of time, and these are hourly bars on SPX. So the length of time that A consumed was identical to the length of time that B consumed, assuming that today's high was the completion of B. So that's pretty cool. So yeah, you can see the bar here where we made the 31. Let's see here. Or sorry, it's one bar after the bar where we made the 31.55 high, which is what I'm proposing is the B wave peak. So almost a perfect equality relationship as far as the duration of wave A versus the duration of wave B, just one hourly bar off. So just about an ideal equality relationship. Just wanted to point that out. So I guess if you could say if C wave is of a similar length, proportional length. Now, typically C waves are a little more time consuming than A waves because usually the A wave is sharp and then you get the C wave, which is a little bit shallower in slope. But let's just assume that the C wave is equal roughly in duration to the A wave off of the B wave termination point or thereabouts. That would bring us to the 25th of June, maybe pushing into the 26th of June. So basically Friday of next week. So we'll see. We'll keep an eye on these time relationships. Just thought it was cool though, and worth pointing out that the time duration of A versus B was almost exactly the same. Certainly a nice time relationship when it does happen. Doesn't always happen like that, but when it does, I always find it kind of fascinating. Okay, so I'll get rid of that. Yeah, that's what I wanted to go through there on these charts. So let's go to the Thinkorswim candlestick chart. And not only do we have that promising looking Elliott wave pattern completed, looks like we also have a nice candlestick sell signal today. So here's the daily chart of SPX, of course. And this is the bearish engulfing candlestick as of today. And we engulf 1, 2, 3 prior real bodies. So that's a legit, clean, bearish engulfing. And we close slightly below that daily T line as well. So that is a nice, strong candlestick sell signal. Definitely complements the short-term wave pattern completion. So I like to see that. And let's see here. Oh, also one thing to mention, you got this 50-day simple moving average down here, which is just slightly below the A wave low at that 29.56. So I don't expect us to necessarily stop at that 50-day simple moving average, but at least you got a major moving average down there for another potential target. I'm not saying close your short position right at the 50, although you'll likely. I wouldn't be surprised if you get a little bit of a reaction off a little bounce and then continue downwards. But just thought I'd point that out. That's another kind of technical target to come down and close. Actually, we have another gap right here. If I bring up the price level tool here, this gap I believe is unclosed, and that gap is at 29.5676. So we'll likely have a little pause at this gap close level, and that lines up pretty well with that 50-day simple moving average. So Even if we are going to work our way down to this lower gap in the 2800s or possibly lower, this is a pretty nice level, at least as an initial target down. And you could get a very weak C wave where we just do A, B, marginal new low in C, close this gap, hit the 50-day simple, and then we're off up again. It's possible, but we'll have to see what the shorter term waves look like on the way down when we get closer, if and when we get closer to that level. But just another technical area to point out. Looks like an area that wants to be visited. Okay, now on the weekly, weekly chart, not 10-minute, weekly chart here. So we had that almost bearish engulfing candlestick last week, certainly a weekly reversal candle. And we stayed within the range of last week's candle and actually broke below the range of last week's candle. And right now we're just kind of sitting up, not quite halfway into the body of last week's candle. So basically on the weekly, the main point is after getting the weekly reversal candle, we did not take out that candle's high. So that weekly reversal is still in effect. Not much else to point out there. Certainly the daily signal jumps out at me far more here. That nice daily bearish engulfing. Okay, now onto the Dow Jones. Onto the Dow Jones Industrial Average. And let's have a look. So the Dow also did a nice bearish engulfing candlestick. A weaker fib retracement of the Dow's initial A wave down there. And you can see basically right into the golden zone there between the 618 and the 65% retrace. Didn't get close to that 786. So a weaker retracement there on the Dow. And also kind of a rejection of this 200-day simple moving average. So that's serving up as some resistance here on the Dow, whereas it did not do that on the S&P. And of course a nice bearish engulfing candlestick and a close below the T-line as of today's action on the Dow. So Dow looking like it wants lower. Weekly on the Dow. Let's see here. Now, of course, I don't really care that much about the Dow for trading purposes, but I still like to look at it as it's a major index. And that weekly reversal bar, dark cloud cover, weekly candle on the Dow last week certainly remains intact. So that's still there. You can see the weekly oscillator overbought, just starting to come off that overbought condition. So that's looking good. And let's see here. Go to the NASDAQ. So on the NASDAQ composite. Now, NASDAQ is, it's almost ridiculous how resistant it is to rolling over here. So the NASDAQ did an extremely deep retracement. Didn't actually take out the high there. But boy, it got close. I mean, we're probably looking at like a 90% retracement or plus, something like that. But technically, we have this initial leg down in the NASDAQ. Extremely deep retracement. Not quite a double top, but almost close enough to be one. And today, not as strong of a reversal candle, but still a reversal certainly from the open. But the NASDAQ just very reluctant to go down here. So I certainly like the reversal pattern a lot more on the S&P and the Dow. I mean, I would expect if those two indices are going to come down and take out the prior low here, you would think that the NASDAQ would follow suit, but I wouldn't count on it. So I'm just kind of watching the NASDAQ in kind of shock as far as how resilient it is, but still expecting it to come down here with an overall market pullback. But I just certainly can't expect it to go very deep compared to the other two. I mean, to me, you're gonna be lucky to take out this low on the NASDAQ, whereas I think it's a lot more solid of an expectation on the other two indices. Now on the NASDAQ weekly, let's have a look here. NASDAQ weekly, well, and here we are. So we have a weekly bullish engulfing candlestick on the NASDAQ. Well, unbelievable. So what do you make of that? The next 3 to 5 weeks are going to be higher in the NASDAQ? I mean, hard to believe, but there's the signal. So I'm gonna kind of roll with the Dow and the S&P and their pattern and their nice daily bearish reversals today. But I guess still need to point out weekly bullish engulfing candle here on the NASDAQ composite. Unreal, right? Okay, so that's the NASDAQ. Pretty crazy. And let's have a look at the VIX. So VIX looking good here too for some more upside. So today, kind of alongside SPX and the Dow doing a bearish engulfing candlestick, VIX did a bullish engulfing candlestick, engulfing 1, 2, 3 prior real bodies. And I also like that the VIX is kind of building a little launch off of here, bullish engulfing right at the 50-day simple and also right around that daily T line. So VIX looks good for a pop up here, and that obviously would coincide well with a C wave down on SPX. Okay, so that's what I want to put on VIX. And as far as the VIX VVIX tool, what do we got going on here? So yeah, we got above the blue moving average in SPX, so that kind of canceled, or I should say extinguished that initial sell signal we got. But now we're slightly below that blue moving average again. So the blue moving average currently sitting at 3102.61. We closed today at 3097.54. So technically, it's starting to produce another sell signal. VVIX hasn't quite gotten up above the red moving average. You didn't really have a divergence here between the lows on VVIX and VIX. So I would just call this kind of in standby mode. Trying to make a sell signal, but not quite there yet. Although certainly attempting to break below the blue moving average, and obviously looking for VVIX to pop above the red moving average, which it just hasn't done as of yet. But on watch here for a sell signal. But this can be kind of a lagging tool. I mean, I think we already have the signal here based on the wave pattern and the candlesticks, and this will just kind of be a nice confirmation, I guess, once it rolls over here and gets below the moving average and VVIX pops above the moving average. But just thought I'd point it out. Okay, well, that's all I wanted to go through. Should be an interesting week next week. Bottom line, short against today's high. And if today's high gets broken, then abandon the short. It's really as simple as that. Targeting, again, into the 2800s, but we'll reassess as the C wave pattern unfolds. All right, Serial Trader signing off.